When we talk about dividend investing, you got to talk about the money making REITs. Let me show you guys 4 of my money makers. Let's get into it. Welcome to Piece of the Pie with Ty. I'm Ty, and I appreciate you guys coming to check me out. If you like any of the content in this video, please hit that like button. It really helps me out with other people finding this video. And subscribe to the channel if you haven't already. If you're a senior to the channel, I appreciate you guys coming back to check me out. My channel is all about making sure people are aware of the different avenues to get a piece of the pie. And today, we're going to be talking about REITs. What is a REIT, you say? A REIT is a real estate investment trust. It's basically a way for you to invest in real estate and not have to actually go out and buy a property. You can invest in a REIT, which is traded on the stock market, just like the typical stock, but is a REIT. A REIT, or real estate investment trust, is a company that owns, operates, and finances income-generating real estate. Modeled after a mutual fund, REITs pull together capital from countless investors. This makes it possible for individuals to invest into real estate without having to buy the actual property and receive dividends off the real estate investment. I myself own 4 different REITs, and I want to show you guys the 4 different REITs that I own. But REITs are definitely great vehicles for retirement and to generate that passive income just by holding on to a stock, and it allows you to be involved in real estate without having to go through the troubles and headache of being a property owner. But to dive into the 4 different REITs, we're going to have to go to the computer. So let's head there now. Alright guys, to look up these REITs, I'm on Dividend Watch. If you guys don't know what Dividend Watch is, make sure you check it out. You can track and analyze your dividend stocks, your portfolio. They even give you advice on dividend aristocrats, high yield dividends, blue chip dividend stocks, dividend zombies. And again, you can track your portfolio, calculate your dividend income, and estimate your monthly income and next year's income or 10 years down the line. And if you guys are interested in Dividend Watch, you can sign up for their premium membership where you get access to all of that. As you guys see, I'm currently active. And if you guys do want to sign up, make sure you use the promo code TY15 to get 15% off of Dividend Watch. Or you can try the free membership, but if you try the free membership, you're going to have limited holdings, limited calculator, and dividend screeners. The premium membership is pretty satisfying. As I said, I'm active, and I didn't get that 15% off that you get if you use the promo code TY15. You can get that 15% off. So definitely check Dividend Watch out and let me know what you guys think about it. And I appreciate everybody that did sign up already with my promo code. Is much appreciated. And this is a great tool to use, Dividend Watch. I use it for almost everything. Now let's get to the money making REIT. Alright guys, now we're going to get into my favorite REIT, EPRT, Essential Properties Realty Trust Inc. And it's trading around $30.79 at the time of this video. And Essential Properties Real Estate Trust is a real estate company that acquires, owns, manages single tenant properties in the United States. The company leases its property to middle market companies such as restaurants, car washes, automotive services, medical centers, dental services, convenience stores, equipment rental, entertainment, early childhood education, and health and fitness, and a lot of other companies. So they get those big buildings that you see your favorite business is in. EPRT is one of those companies that owns that. So the Planet Fitness, the local grocery store, the doctor's office, they might be on a property owned by a company like EPRT. Their dividend yield is pretty nice. It's 3.12%, an annual dividend of 96 cents per share, which is great. That's a great dividend. And one of my favorite things that I like about them, of course, they have had steady growth in their dividends. Since I've been with them, they've had that steady growth. As you guys see, in 2018, it was 43 cents, 2019, 88 cents, 2020, 93 cents, and it's still going up. And it's something to point out, this company is also pretty new. That's another reason why they were one of my favorite picks. Their net income 2017, that's when they weren't active, and they hit the scene in 2018, and their net income was negative, but they had just went public. 2019, they were positive 207%. And then 2020, everybody know COVID had an effect on that, negative 11.45%. Cash flow positive for all those years, which is good. That's how you know the company is strong. The cash flow is still positive. And total liabilities, they were positive in 2018 and 2019 and 2020. They were negative. That's expected from a new company because they're probably going to acquire a lot more profit. As long as that dividend income is steadily going up, I'm content. And this is the chart for EPRT. It's notable that EPRT had a 1-year growth of 80%. And again, that might be part of why it's one of my favorite REITs, but it had a growth of 80%. And I jumped in around $15 when I bought my first share. So I've been seeing nice growth off that 80% return in 1 year. That's great for a REIT. And it has a little bit of ETF exposure. But again, EPRT is new to the scene and it's a mid-cap company. But I really like EPRT. Again, it's my favorite REIT. Alright, let's go to the next one. The next REIT is Omega Healthcare Investor. Omega is a real estate investment trust that invests in long-term healthcare industry, primarily skilled nursing and assisted living facilities. So they're a bit different than EPRT because they mainly focus on medical facilities and assisted living facilities, which is great. It's the healthcare field. You can't really go wrong with the healthcare field. And then it's a REIT in the healthcare field. You know I had to have it. Omega Healthcare is trading around $33.26. They pay an annual dividend of $2.68 per share. And this company is very popular on the stock market. A lot of people are talking about it. You Google it, you're going to find a lot of people talking about this REIT. But that high dividend yield and the fact that they're in the healthcare and assisted living sector, yeah, I had to have. Omega Healthcare has been continuously increasing their dividends too. 2018, $2.64, 2019, $2.65, 2020, $2.68, and then it's still increasing for this year. And that's one thing that's really important when you're looking for a REIT and a dividend company. COVID happened, a lot of places shut down, a lot of people couldn't pay their dividends, but these companies that I'm telling you about, they stayed strong. If a company can stay strong during COVID, it might be something that you want to have on your radar. Again, I'm not a financial advisor, but just the common sense of things. If it can withstand a pandemic, hey, you might be good through anything. Net income for 2018 positive, net income for 2019 positive, 2020 negative, but again, you guys know what's going on, but they still paid that strong dividend. Cash flow was negative for 2018, but positive for 2019 and positive for 2020. Again, that's a sign of a strong company. Liabilities, positive for 2018, negative for 2019, and barely negative for 2020. That's 0.02%. So you might not even want to count that. But that's still a strong company. Strong cash flow, strong net income, strong company. And they have a bit of ETF exposure too, a little bit more than EPRT. And they are, like EPRT, a mid-cap company. Omega Healthcare had a growth of 8.27% for the year. So they didn't have an explosive growth like EPRT, but that dividend payout definitely makes up for it. Next on the list is the cheapest REIT, and it's ERES Commercial Real Estate Corporation. ERES Commercial Real Estate Corporation, a specialty finance company, originates and invests in commercial real estate, loans, and related investments in the United States. So they mainly invest in properties, just like EPRT. They are trading at $15.43, and ERES has a dividend yield of 8.8. Oh my God, that's pretty high. And again, this is a company that I chose, and I did a video on why I chose ERES and Omega Healthcare. You guys should check that video out. But I showed y'all on the screener how you can find these companies with these high dividends, and you can make sure it's a stable company. Make sure you check that video out. And ERES has been consistently increasing its dividends, which is one of the reasons that they caught my attention. ERES net income 2018 positive, negative in 2019, negative in 2020. Cash flow a little bit weaker than what we've been seeing from the others, but I'm gonna show you guys why that is. Liabilities negative in 2020, negative in 2019, 2018, and they also have a little bit of exposures with ETFs. But you guys see right here, they are a small cap company, and that's something to point out too. You guys got to know the difference between small cap, mid cap, large cap, and mega cap. There are different risks to each one. So ERES has the greatest dividend yield, but it's also one of the riskier ones because it's a small cap company, meaning it's not as strong as a larger company. But it's definitely one to check out too. Again, I own it in my portfolio, so you might want to check it out. And the last REIT, they say the best for last, and we're talking about Realty. Realty is the GOAT of the game. If you talk about REITs, Realty is the king of kings when it comes to dividend income and REITs. Realty Income Corporation is O. Sometimes I say Realty, but you know what I mean. O is trading around $70.84. Realty Income, the monthly dividend company, is an S&P 500 company dedicated to providing shareholders with dependable monthly income. The company is structured as a REIT, and its monthly dividends are supported by cash flow of over 6,500 real estate owned properties. To date, the company has declared 608 consecutive common stock monthly dividends throughout its 52-year operating history, and increased dividends over 109 times since Realty public listing in 1994. It's a dividend aristocrat, of course, but O is the talk of town. O is one of them companies that if you don't have in your retirement portfolio, what are you doing? Alright, O is definitely a solid company, and people rely on O for that guaranteed dividend income. The dividend yield on O is 3.97%. It gives you an annual dividend of $2.82 annually. And it's definitely notable that O is the most expensive REIT on my list. And you guys can see the consecutive dividend increase. And again, that's through the pandemic and all. Net income positive 2018, 2019 positive, 2020 negative, and then that cash flow positive all the way through. Liabilities negative, but again, they just might be grabbing more properties. So the only one that had that negative cash flow was ERES, but they are a smaller company. They have ETF exposure, and the list is much longer than this on who is invested in O, but this is just some of the biggest names that hold the most percentages of O. And as you guys can see, the market capitalization of O is $27 billion. So it's a mega cap company. O had a 1-year growth of 16.38% over the last year. And I didn't say about ERES. ERES has a 1-year growth of 59.57% at the time of this video. So that's them on Dividend Watch. You guys know how I like to give you guys a little extra. So we're going to check and see what Robinhood is saying about these companies. So EPRT, as you guys see, as I said, they had a 1-year growth of 80+%, and analysts currently say it's an 86% buy. Omega Healthcare, as you guys see, they had a 8.27% growth, and analysts say it's a 57% buy. And ERES Commercial, I like to call them ACRE, but ERES Commercial had a 1-year growth of 59.57% growth for 1 year, which is great. And analysts say it's a 83% buy. And last but not least, the OG of the game, Realty Income. As I said, they had a 1-year growth of 16.38%. And analysts say they are 58% buy. So the analysts are really bullish on EPRT and ERES, but all of them are buys on Robinhood. So that was a quick run through on 4 different REITs that I definitely like because I'm investing in all 4 of them. Alright, and I'm investing in them pretty heavily, especially in my retirement portfolio. In your retirement portfolio, you should definitely consider having a lot of REITs because they're a way that you can earn income during your retirement without having to sell your portfolio and lose the value of your portfolio. You can just hold your portfolio, have that passive income coming to you, and for instance, if something does happen to you, you can pass your dividend portfolio on to your son, daughter, or the next generation so you can keep that money flowing in your family. And that's a way to build that generational wealth. So definitely make sure you guys check out some REITs. The REITs that I showed you guys in this video are the ones that I'm bullish on. So definitely check them out because they're pretty solid and they pay a dividend consistently. And they have paid a dividend consistently even through hard times of the pandemic. So definitely make sure you check out my Money Making REITs. If you like any of the content in this video, please hit that like button and make sure that you subscribe if you haven't already and come back and see. I got plenty more to talk about. Thanks.